Hello everyone, welcome to EduTap and welcome to today's session. So today you have a very important session that is for your phase 2 RBI Grade B 2024. Okay, so today is the marathon session for your RBI notifications and the finance current affair. I hope you know how important the RBI notifications are from the examination point of view. Okay, so we are going to have the comprehensive coverage and we are specifically going to discuss the recent notifications that have been released in the October and the September. So I'm going to provide you multiple questions so that you can practice the RBI notifications and finance current affair questions. Okay, give me a thumbs up. Do tell me if I'm clearly audible and visible. Everything is fine. Do tell me. Okay, so this is a revision session. This is a marathon session where we are going to revise the concepts. Okay, so I hope you have studied the basic concepts. So in this session, this is a revision session. This is a marathon session. Okay, so this is the idea of the session where we are going to practice the MCQs, and I'm also going to explain some of the notifications that are a little difficult, but this is mostly like covering the important RBI notifications and finance current affair from the recent months. Okay, so now before starting with the session, do subscribe to the YouTube channel of EduTap and join our Telegram channel. You will get the PDF of the session in the Telegram channel. Okay, so in the Telegram channel you will get the PDF and the link for the Telegram channel is provided in the description box below. Okay, so let's start with the first question. I hope you will be able to answer this question. Let's see how many of you are aware about this concept. So the Reserve Bank of India in June has released the currency swap framework for the 2024-27 period. Okay, now recently, that is in October 2024, there is the agreement that the RBI has done with the Maldives Monetary Authority. So now you have to give the answer of this question. Try to answer this question. Let's see how many of you are able to answer this question. So under the agreement, the Maldives Monetary Authority is eligible for financing support from the RBI amounting to US dollars 200 million. No, it is 400 millions. Okay, under the US dollar Euro swap window and INR 30 billion under the INR swap window. Okay, so here it should not be 200, it should be 400. The SAARC currency swap framework came into operation on November 15, 2015. So the SAARC currency swap framework has been in operation since which time period? Since 2012, to provide a backstop line of funding for the short-term foreign exchange liquidity requirements. So if any SAARC country is going under the liquidity problems and they do not have the foreign exchange, or they are having the balance of payment crisis where they do not have the foreign exchange for the imports. Okay, so the RBI, that is India, it provides the currency swap framework so that the SAARC countries, the RBI can help the SAARC countries to get the liquidity. Okay, and this facility has been provided since 2012. The total corpus of the rupee support under the SAARC currency swap framework for 2024-27 is 250 billion rupees. That is correct. Okay, so only the third one is correct. So here the right answer will be 1 and 2. That is A. So incorrect statements, the first and the second statements are incorrect. Okay, so here the right answer is A. So the Reserve Bank of India has entered into a currency swap agreement. First of all, RBI announced the SAARC currency swap framework for the period of 2024-2027 in June. In this, RBI said that this is a framework where we will be providing, for the short term, we will be providing the foreign exchange facility to the SAARC countries if they are going through the liquidity crunch or if they are going through the balance of payment crisis. Okay, so it is provided for the short term and it is only provided for the SAARC countries. Now before 2024, the short-term foreign exchange or the foreign exchange was provided, that was dollars or euro. So the SAARC countries can take the dollar or euro from the RBI and can provide their currency to RBI. So this was a swap agreement that the SAARC countries can come with the RBI. But now in the 2024-27, for this time period, there was an additional facility that RBI has provided. So under the framework, a separate INR, that is rupee swap window, has also been introduced. That is the SAARC countries, for their balance of payment or for their imports, if they want to take the rupees, they can take the rupees and they can provide their currency. So they can take the rupees for the short term and they can take the rupees for their foreign exchange or for their balance of payment requirements at the concessional rate. Okay, so under this swap support, there is the swap window that is provided in rupees, as well as there is the swap window or the swap facility that is also provided in terms of dollars and euro. But the limit for the rupee facility is rupees 250 billion, and for the dollar and euro, the window is having the overall corpus of US dollar 2 billion. Okay, and if you are taking the money in rupees, if you are taking the swap facility in rupees, so you will be provided, the SAARC countries will be provided with the concessions. Okay, so I hope you already have gone through this. Now the RBI has entered into the currency swap agreement with the MMA, that is Maldives Monetary Authority, under the SAARC currency swap framework for 2024-27. Now, under the agreement, the MMA is eligible for support from India from the RBI amounting to US dollar 400 million under the US dollar or euro swap window, and INR 30 million under the INR swap window, and the agreement would be valid till June 18, 2027. SAARC currency framework has come into the operation since 2012. So this is the whole idea. Now coming to the next news article and the next question. So recently what has happened, that the central government has announced and has formulated the foreign exchange compounding proceeding rules 2024. So this new rules, they have succeeded the rules of 2000. So there was the compounding proceeding rules of 2000 that has been superseded by the foreign exchange compounding proceeding rules of 2024 that has been recently released by the central government. Now under this rules, the compounding of contravention can happen. So what is contravention? Contravention is any violation. So if you are doing the violation, against the Foreign Exchange Management Act. So if you are violating the rules of Foreign Exchange Management Act, and if you plead guilty that okay, I have done this mistake, and you like it is a voluntary thing that you are doing, you are pleading guilty, you are voluntarily telling the RBI that okay, I have done this violation and I want to plead guilty. Okay, so the violation is the contravention that you have done. So contravention is the violation that you have done, and if you are pleading guilty, you are trying to resolve the issue by compounding. So rather than going in front of the adjudicating authority, rather than going through the whole of the proceedings, you are just pleading guilty that okay, I have done this mistake, and kindly resolve the issue, kindly address this issue. Okay, so this is the idea. Let me just tell you that contravention is a breach of the provision of the FEMA regulations, the Foreign Exchange Management Act, rules and regulations and such. So contravention is a violation that you have done. Contravention is the violation that you have done. Compounding refers to the process of voluntarily admitting that I have done this mistake and pleading guilty, so that you do not have to go through the adjudicating authority. Okay, so this is the basic idea, that compounding proceedings, how the compounding proceedings will happen under the Reserve Bank of India. So for that, the Reserve Bank of India has released the complete guidelines. Okay, so central government has released the new Foreign Exchange Compounding Proceedings rules of 2024 that has superseded the 2000 rules and regulations, and now under this proceeding rules and regulation, the compounding proceeding will happen. So try to answer this question. Okay, on an application made. So if a person is making an application committing such contravention, such violation, be compounded within. So if I have violated the FEMA regulation, let's say, and if I'm making the regulation, if I'm making the application that I have done the violation, kindly resolve this issue. So this issue will be compounded within 180 days. So within 180 days, the issue has to be resolved. Okay, so if a person is making application that he has committed any violation, that has to be compounded within 180 days by the RBI, okay, by the officers of the Reserve Bank. Upon adjudication, if compounding does not happen, or if you are voluntarily, you are not admitting your mistake and you are not even aware about your mistake, and the adjudication process happens, okay, if the adjudication process starts, if you go in front of the adjudicating authority, so if that process is happening, that means you are not accepting your mistake, or you have done the violation but you are trying to hide it, so then your case will not be under compounding, because you have not raised the compounding process, you have not requested the compounding process. So upon adjudication, the person is liable to pay a penalty up to thrice the sum involved in such violation, where the amount is quantifiable. Up to rupees 2 lakh rupees you will have to pay where the amount is not directly quantifiable, and where the violation is a continuing one, that means you are continuing the violation, you are not agreeing with the you are not accepting your mistake and you are continuing with the violation, then further penalty of 5,000 rupees per day you will have to pay for the days that you are continuing the violation. Okay, so that it is better to compound, it is better to accept your mistake, it is better to plead guilty and just finish the ordeal before it goes in front of the adjudicating authority, otherwise it will be very troublesome. Okay, so that's why this is the idea. An applicant may submit a compounding application along with the relevant documents physically or through the Prava portal, because Prava portal is what? It is the platform for regulatory application, validation and authorization. So through this you can send your application for the compounding also. So it is through Prava, not through the Udgam. Udgam is for your unclaimed deposits. Okay, so that is the idea. So first one is wrong, third one is also wrong. So first, so the correct statement is 2 only. So the answer here is E. Okay. So this is the idea, that central government had formulated the new rules for the compounding proceedings that has superseded the earlier rules of 2000, and the compounding process has to finish within 180 days. If you do not apply for the compounding process, then the case will go in front of the adjudicating authority, and adjudicating authority can impose very, very high penalties on you. That is the here you can see. Okay, so this is the contravention compounding. I have provided you any contravention under section 13 can be compounded under section 15. So under section 15 it is written, under section 15 it is written, under section 15 of the FEMA regulation it is written that any contravention can be compounded other than section 3A. So section 3A, this if you have violated the section 3A, this cannot be compounded. So if you have violated the section 3A, you cannot send the compounding application, you have to go through the adjudicating authority. So what is section 3A? Why it is so important? Section 3A states that if you are dealing in the foreign exchange without being an authorized person, that means you are selling or you are buying or you are dealing in the foreign exchange or foreign security to any person not being an authorized person. So that is wrong, because only authorized persons are able to do so, right? Or they should be doing it. So the basic idea is, so if you are violating this rule, then you have to go through the adjudicating authority. There is no compounding process for this. So Reserve Bank is empowered to compound any contravention as defined under the section 13 of the FEMA regulation, except for the contravention under the section 3A. So now coming to the second question, try to answer this question. All compounding, any confusion anyone has in this? So which of the following statement is incorrect in regards to the compounding proceedings? All compounding application, if you are sending the compounding application to Reserve Bank of India, the prescribed fee for sending this application is rupees 10,000 plus the GST is applicable of 18%. Okay. In respect of a contravention, in respect of a violation that you have committed by any person within a period of 3 years. So if you have committed a violation, let's say you have committed a violation and that was compounded. That means you raised the compounding request and RBI said that okay, you have done this mistake, no problem, do not do it again. Now within the period of 3 years you again do the same violation. So in this case again the compounding will not happen. Now you will have to go in front of the adjudicating authority, because within 3 years you are doing the same mistake again. Okay. So in respect to the contravention, the violation that you have done, if you are committing the same violation within the period of 3 years, so the relevant provisions of the FEMA Act will apply now. You will have to go in front of the adjudicating authority and will have to face the harsher penalties. The compounding amount as specified in the compounding order shall be paid within 15 days. And if like there is the compounding, whenever the compounding happens, the payments have to be made within 15 days. Okay. So this is the idea. So first one is correct, second is wrong, and the third one is also wrong. So the answer is 2 and 3 here. Okay, so B is the answer. So all the compounding applications shall be submitted along with the prescribed fee plus GST. Compounding applications shall be returned if there is administrative action has not been completed, you have not completed the application, so your application will be returned. But if you are resubmitting the application, you do not have to pay the fee again. Okay. Now certain cases which are not eligible for compounding, the 3A is not eligible for compounding, where you are dealing in or in the foreign exchange or the foreign security to any other person other than the authorized person. So that in this case compounding is not allowed, as well as compounding is not allowed if you are doing the same violation within the period of 3 years again. So if you are doing the same violation within a period of 3 years, so again the compounding will not be allowed. No compounding application shall be processed unless the administrative process has been completed. Contravention of serious nature, where money laundering or terror financing or sovereignty or integrity of the nation is being affected, or it is suspected to be leading to this. So contravention, that is violation of serious nature, that is transactions suspected of money laundering, terror financing and such, they will not be coming under the compounding. This will go under the abjugating authority. As well as in the cases where the abjugating authority has already released the order, in this case also the compounding cannot happen, because the proceedings has already been finished by the abjugating authority. After the order has been released by the abjugating authority, after that if you want to initiate the compounding, that cannot happen, because abjugating authority has already given the order. So if the abjugating authority has already passed the order, after that the compounding process cannot start. Okay, so these are certain cases where the compounding process cannot start. That is, if you have violated the same case within the period of 3 years, administrative action is in process, or contravention is of very serious nature, in this case also the compounding cannot happen. Or if the amount is involved is not quantifiable, or attracting provisions of section 37A, or abjugating authority has released some order, in these cases the compounding cannot happen. Okay, now the compounding authority has to finish, that is the Reserve Bank of India has to finish the compounding process within 180 days, and the applicant can opt for personal hearing, where the applicant is encouraged to come by himself to or he can attend personally or through a virtual mode by himself or herself. Okay. Now payment has to be made if the compounding order has been passed and the amount has been told. So within 15 days you have to pay the compounding order. Okay, so this is the basic idea. Okay, there are different fine amounts or different penalties for different cases. If you have done some reporting mistake, some submission violation you have done, so fixed amount is 10,000 and plus the variable amount on the basis of how much violation, how much transaction is included here. Any contravention, any violation pertaining to issuance of any guarantee. So if there is guarantees that are involved, you have taken the guarantee that is not allowed under the FAMA Act, so then you will have to pay the fixed amount of penalty of 5 lakh plus variable amount also you have to pay. Okay, so this is the basic idea. Now coming to the next question, try to answer this question. This is regarding the Monetary Policy Committee meeting that has recently happened. So which of the following statement is or are incorrect as per the Monetary Policy Committee statement? So the Monetary Policy Committee also decided to change the monetary policy stance to neutral from the withdrawal of accommodation. The Monetary Policy Committee has changed its stance to neutral. Neutral means that in the on the basis of the future conditions, the Reserve Bank of India can increase the repo rate or decrease the repo rate or keep the repo rate constant. So there is a neutral stance that has been taken by MPC now, that we can move the repo rate in whichever direction on the basis of the future conditions. Okay, so that is a neutral stance. So this is correct. Real GDP growth for 2024-25 is projected at 7.2%. Correct. CPI inflation for 2024-25 is projected at 4.5% by the MPC, and MSF and bank rate are 6.75%. Okay, so 3 and 4 are incorrect, and that's why the correct answer is D here. Okay, so now this is the basic idea of the Monetary Policy Committee. I have taken a complete session on the Monetary Policy Committee, so I hope you know the important points here. Coming to the next news article, the Statement on Developmental and Regulatory Policy document was released in October 2024 with the Monetary Policy Committee statement. Which of the following statement is or are correct, that you have to tell me. So to enable the remitters, the people that are sending the money in the RTGS and IMPS, to verify the name of the beneficiary, there is the proposal of the Monetary Policy Committee to introduce a beneficiary account name lookup facility. Is it so? So the proposal See, what is the idea that the UPI and IMPS, they already have the facility where you can see the name of the receiver of the money when you are feeding in the data. But for the RTGS and NEFT, there is no such facility, and that's why the RBI has proposed to bring this facility of beneficiary account name lookup facility for the RTGS and NEFT. The report of the expert committee on primary urban cooperative banks chaired by Sri N.S. Vishwanathan had provided broad guiding principles through its recommendations in 2021 on newly enabled capital related provisions. So this is correct, and here it was said. Now the RBI is releasing a discussion paper that is prepared by the working group of the Reserve Bank of India, and that is taking into consideration the recommendation of the expert committee also. Okay, so a discussion paper is being released by the RBI. So this is correct actually. It has been decided to broaden the scope of no levying. So right now there is no levy, or the banks or the NBFCs, they cannot levy the foreclosure charges or prepayment penalties on the individual borrowers. Now it has been said that even for the micro and small enterprises, there should be no levy of the foreclosure charges or prepayment penalties, and it is only for the micro and small enterprises, not for the medium enterprises. Okay, so this is also wrong. So first and third are wrong. So here the correct one is only 2. E is the answer here. Got it? The first one is wrong. Sorry, yes. So first one is wrong, third one is also wrong. So only the second one is correct. So E is the answer here. First one is wrong because it should be NEFT. And third one is also wrong because medium enterprises is not there. Okay, it is only for the micro and small enterprises. It has been like proposed by the RBI that for the micro and small enterprises there should be no levy of foreclosure charges or prepayment penalties. The discussion paper is released for the primary urban cooperative banks, keeping in mind the recommendation of the expert committee. So working group was constituted in RBI to further operationalize the broad-based recommendation of the expert committee, and now the discussion paper is going to be released soon. The beneficiary account name lookup facility is going to be for the RTGS and NEFT. Okay, so here the answer is 2 only. Now coming to the next question. The third one is also wrong. Okay, medium should not be here. It is only for the micro and small enterprises. Coming to the next question. The Reserve Bank of India. Clear? Any confusion in the previous question? Any confusion, anyone? Any confusion? Okay, so the Reserve Bank of India called for setting up of a data repository to monitor climate related risk. Which of the following statement is correct in this regards? The Reserve Bank proposes to create a data repository, namely the Reserve Bank Climate Risk Information System, comprising of 2 parts. This is correct. The first part will be web-based directory listing various data sources which will be accessible to the public. So the RBI is thinking of releasing the Reserve Bank Climate Risk Information System. Now it will have 2 parts. One will be the web-based directory that will be available to the public. The second one will be the data portal consisting of the data set. Now this will be only available to the regulated entities. So it is not available to the public, it is only available. The data portal will only be available to the regulated entities of the RBI. So first one is correct, the second one is also correct, the third one is wrong, and you have to find the correct statement. So 1 and 2 is the answer here. The second one is also correct, because the web-based directory is available or accessible to the public. Okay, so third one is wrong here, because here it is the data portal is only for the regulated entities. So the correct statement is 1 and 2, both. A is the answer. Now the next question is that there are the changes that have been brought in the UPI 123 Pay and UPI Lite. So which of the following statement is incorrect in regards to the UPI 123 Pay and UPI Lite? So UPI 123 was launched in March 2021 with a view. So it was not launched in March 2021 and it is available in 12 languages, not 10. Currently the per transaction limit in UPI 123 Pay is capped at 5,000. In order to widen the use cases and consultation with the stakeholders, the UPI 123 Pay limit is going to be increased from 5,000 to 10,000. So this is correct. To widen the scope of the usage of this product, it has now been decided to increase the UPI Lite wallet limit to 5,000 and per transaction. So in the UPI Lite case, the wallet limit was 2,000. That has been like the wallet balance limit was 2,000, that has been increased to 5,000, as well as the per transaction limit was 500, that has been, or that is proposed to be increased to 1,000. So the per transaction limit is proposed to be increased to 1,000. I hope this is clear. So the second and third statements are correct, and that's why first only the the third statement is wrong, because it should be 1,000. Per transaction limit is 1,000, not 2,000. Okay. So first statement is wrong because it is 2022. UPI 123 Pay was launched in March 2022 and it is available in 12 languages. The third one is also wrong because the per transaction limit is proposed to be 1,000. Okay, so third one is also wrong. So incorrect is 1 and 3. 1 and 3 are the incorrect statements. Only the second one was correct. Okay. Any confusion, anyone now? Any confusion, anyone? So UPI 123 Pay was launched in March 2022. It is available in 12 languages. Its limit is at 5,000 per transaction, and now it is proposed to increase the per transaction limit to 10,000. UPI Lite per transaction limit is 500, which is proposed to be increased to 1,000, as well as the wallet limit is 2,000, that is proposed to be increased to 5,000. That is the idea. Now coming to the next question, the revised draft. So there is a draft regulatory framework that has been released on the form of business and the prudential regulation for investment for the banks. Okay, so which businesses the bank should be undertaking and which businesses the bank should not be undertaking. So there is a draft regulatory framework that has been released in regards to the business that the bank should be undertaking and should not be. So the form of business for the banks and the prudential regulation of investment for the banks. This is a draft regulatory framework that has been released. Now as per the draft framework, which of the following function shall not be carried out departmentally by the bank? That is, bank by itself should not be carrying out which of the following functions? Try to answer this. Okay. Yes. So the bank should not be carrying out the mutual fund business, the pension fund management and the investment advisory services. So let's understand more about this. The answer here is that the bank should not be conducting these businesses. So let's understand it and then let's come back to the question again. So draft circular has been released for form of business and prudential regulation for investment for the banks. It has been said that we have to ring fence the main business of the bank, the core business of the bank, as well as the business that the bank can do and the other businesses, so that the bank is not getting in too much of the risk. So there are some businesses that should not be allowed by the bank. Okay, so that is why there are specific directions that have been released and a draft circular has been released, and it has been said that when the final circular comes, so this is just a draft, when the final circular comes, after that 2 years will be given to the banks, and after the draft final, the directions will come into effect from 2 years from the date of the final circular. Now this circular is applicable to all the scheduled commercial banks excluding the regional rural banks. Okay. Now the form of business. So the banks, they should be conducting the core business. Now the core business of a bank is what? The core business of a bank is taking the deposits and lending. Taking the deposits and lending is the core business of the bank. Other than this core business, the bank can also undertake the factoring business, the primary dealership, the credit card business, housing finance, equipment leasing and hire purchase. Now these additional businesses can be undertaken by the bank internally, that is departmentally, or through its separate group entities. So HDFC Bank, you can see these are the group entities of HDFC Bank. So HDFC Bank, HDFC Life, that is HDFC Insurance segment, HDFC Pension, HDFC Mutual Fund. So you can understand that there is the HDFC Bank and there are the group entities of this bank. Now the HDFC Bank can itself or through its separate group entity can undertake these activities. But now which activities the bank departmentally cannot do? So bank through its department or the bank internally or departmentally cannot undertake the mutual fund business, the insurance business, the pension fund management, investment advisory services, portfolio management services, broking services, and other such risk sharing activities that require ring fencing. This kind of activity shall not be carried out by bank departmentally, that is by itself. It can only, now these activities, that is mutual fund, insurance, pension, these kind of facilities can only be provided by the group entities of the bank, but not by the bank itself. Not by the bank itself. It can be provided by the group entities. This is the idea. Now, the bank, it is said that the bank can undertake the agency or advertisement services. That is, the banks, they can do the agency business. They can promote the mutual fund, or they can sell on behalf of the mutual fund. So the HDFC Bank on behalf of the HDFC mutual fund can sell the mutual fund. Okay, that is, HDFC Bank on its own name cannot sell the mutual fund, but on the behalf of mutual fund, HDFC mutual fund, the HDFC Bank can undertake the agency services. That is, the HDFC Bank should not be taking the risk directly. The risk of the mutual fund is still under the HDFC mutual fund, just the HDFC Bank is selling in the name of the mutual fund. So the agency business without risk participation can be undertaken by the bank for distribution of the third party products or for the distribution of products and services. So an agency bank is a business which provides a service on behalf of other business. So the bank can undertake these activities directly, departmentally, but the banks cannot undertake these activities departmentally. Okay, so banks cannot undertake the mutual fund business, pension fund management, investment advisory services, or the portfolio management services, and this directly departmentally. Now only a single entity within a bank group. It's not like that HDFC mutual fund can also sell insurance, can also sell pension products, can also sell mutual fund. No, only a single entity within a bank group performs a particular form of permissible business. So one entity, that is HDFC mutual fund, should only do the mutual fund business. HDFC Life, that is the HDFC Insurance segment, should only undertake insurance business. Okay, as well as all these HDFC Pension, HDFC Mutual Fund, HDFC Life, they are the NBFCs. Okay, so in addition to complying with the overlap in lending business, so there should be no overlap in the lending business. With this, the NBFCs in a group has to follow the scale-based regulations as applicable to NBFC upper layer. So if you are connected, if a mutual fund, if a insurance company, or if a pension company, they are connected with a particular bank, if they are under this bank group, so now these NBFCs, they have to comply with the scale-based regulations as applicable to NBFC upper layer, as well as regulatory and other restrictions that are applicable to banks. So the regulatory and other restrictions that are applicable to bank in terms of loan and advances will also be followed by these NBFCs. A group entity shall not be used. A group entity shall not be used to circumvent or to pass through the regulations. That should not be happening by the bank. Bank shall require prior approval of the Department of Regulation if the bank want to undertake any new activity through its group entity, or it wants to open a new group entity. Conduct of activities by small finance bank and payment bank shall also be subject to the respective licensing guidelines. Now, how many of you know that a bank, if you want to establish a bank, there is NOFHC that is required. So non-operative financial holding company is a financial institution through which a promoter or promoter group will be permitted to set up a new bank. So if you want to set up a new bank, you have to first open the NOFHC. Through this NOFHC, you can open the new bank. Okay, so NOFHC, like only a single entity within the NOFHC, let's say NOFHC, has 3 entities, the SDFC Bank, SDFC Mutual Fund and such, or XYZ Bank, XYZ Mutual Fund, XYZ Insurance Company. So only a single entity within the NOFHC undertakes a particular form of activity. NOFHCs shall not set up any new entity for 3 years from the date of commencement of its business. So this is the whole idea. Now the activity undertaken departmentally. So bank departmentally is taking the factoring services, equipment leasing. So these are the services that the bank can take departmentally. Equipment leasing and hire purchase, business factoring service, primary dealership services, underwriting, insurance, broking services. You cannot provide the insurance, but you can provide the brokerage for the insurance. You can be a broker, you can be a agent for the insurance company. Agency business, referral services and these kind of like membership of SEBI. So the bank can have the membership of the SEBI, undertaking proprietary transaction, that is for your own transactions, for your own investment in the shares and the stocks. So for the proprietary, for the own transactions, you can take the membership of the stock exchanges. You can become a member of the NSE so that you can do the investments in the stocks available in the National Stock Exchange. Okay, so there should be a board approved policy that shall comprehensively cover the said activity that is undertaken by the bank departmentally. You have to follow the know your customer, anti-money laundering and countering of the financing of the terrorists. These norms you have to undertake, and general principles as written in the Charter of Customer Rights, you have to follow that. No bank shall engage in any activity other than these activities and the core business of the bank, that is taking the deposit and lending. This is the basic idea. Now try to answer this. We have discussed about the forms of business, that the bank can departmentally undertake these activities, but the bank cannot undertake departmentally the other activities. These activities cannot be taken by the bank departmentally. Now coming to the prudential regulation for investments, there are some limits that have been imposed on the investment. What are the limits that you have to tell me? So as per the draft framework, the equity investment by a bank in any company, including its group entity individually, shall not exceed what % of the bank's paid up share capital and reserves as per the last audited balance sheet or a subsequent unaudited balance sheet, whichever is lower. So there is the limit of the equity investment by a bank in any company. So what is that limit? As well as there is the limit aggregate of the equity investment that can happen. So there is a equity investment limit on the factoring subsidiaries and factory companies. So the limit is 10%. So that is the limit of the equity investment in the group company or in the group company or in the group activity, and there is the limit of equity investment in the factoring subsidies or the factoring companies. So if we are only talking about factoring services and factoring companies, so in the aggregate limit is 10%. For a single company, if we are generally talking about a single company, the limit is 10% only. Okay, so 10 and 10. C is the answer here. Okay, C is the answer here. So here you can see that equity investment by a bank in any company, including the group entity individually, if you are investing in a company, the limit is 10%. And if you are doing the aggregate investment when it comes to factoring subsidiaries and factoring companies, the aggregate investment limit is also 10%. This is specifically for the factoring business. Aggregate equity investment made in all companies, including group entities, that is should not exceed 20%. Okay, so this is the basic idea. Any confusion, anyone? Is there any confusion anyone has? Any confusion anyone? Okay, try to answer this question. The revised draft regulatory framework on form of business. So here it has been said that as per the draft framework, no bank shall sponsor more than one asset reconstruction company at any point of time. Further, the aggregate shareholding of a bank group in any ARC shall be less than 20%. Shall be less than 20%. Okay, so this is the idea that no bank shall hold more than 10% of the equity in the deposit taking NBFC. No bank shall make an investment of more than 10% in the unit capital of REIT or the InvIT. No bank shall make any investment in the category 3 or alternative investment fund. No bank shall sponsor more than one asset reconstruction company. No bank shall have the aggregate shareholding of a bank group in the ARC should not be more than 20%. So this is the basic idea. As well as if you are investing the investment of 20% for the investment of 20% or more in the equity capital of any financial service company or category 1 or 2 AIF individually or collectively by a bank group, this is the limit of investment by a whole of the bank group. Okay, so this is for the banks. Now this is for the bank group. Limits are there for the bank group also. Okay, so this is the basic idea. Now coming to the next news article. In view of the provisions of the Credit Information Company Regulation Act, entities whose license or certificate of registration has been cancelled by the RBI can no longer be deemed as the credit institution. So basically the credit institutions, they provide the information to the credit information companies. Okay, credit institutions, they provide the information to the credit information companies. Now let's say that there is a credit institution XYZ bank whose certificate of registration has been cancelled, whose license has been cancelled. So now this XYZ bank is not considered as a credit institution. So this XYZ bank cannot provide the information to the credit information company. But the borrowers are still returning their money to this XYZ bank because the borrowers took the loan from the XYZ bank. But it cannot provide the information to the credit information company because as per the Credit Information Company Regulation Act, only the credit institutions that have the license, they can pass on the data to the credit information companies. So now the RBI has amended some of the rules and regulation. Try to answer this question. All the credit institutions whose license or certificate of registration has been cancelled by the RBI shall be categorized as credit institutions under Section 2F7 of the Credit Information Companies Regulation Act. That means that they will continue to be credit institutions only as per the credit information companies. These credit institutions shall continue to report credit information of the borrowers that is onboarded to the credit information companies. So they will pass on the data of the borrowers to the credit information companies. Credit information companies shall charge no annual or membership fees. So the credit information companies cannot charge any membership or annual fees. Okay, so even after the registration or the certificate of registration or the license has been cancelled for a bank, still the bank or the credit institution should provide the information to the credit information companies about the borrowers that are continuing to return the money to the cancelled bank even. Okay, so this is the basic idea. These are the norms that have to be followed, and CIC shall not charge the annual or membership fees from the credit institutions whose license has been cancelled. Okay, so these credit institutions whose license or certificate of registration has been cancelled continue to report the credit information of the borrowers that were onboarded before and whose data has been shared with the credit information companies till the loan life cycle is completed or till the bank is completely wound up. Okay, now coming to the next question, try to answer this question. That the Reserve Bank of India invited application for the scholarship scheme for faculty members from academic institutions. Which of the following statement is correct? So the scholarship scheme is open to full-time faculty members teaching in economics or finance in the UGC recognized university or such. The duration of the scholarship is limited to the maximum of 3 months, and the candidates below the age of 65 years are eligible to apply for the scholarship. So the first statement and the second statement, they both are correct, that the scholarship scheme is open for the full-time faculty members and the duration is limited to a maximum of 3 months. Candidates below the age of 55 years are eligible to apply. So 1 and 2 are correct. The third one is wrong. Okay, so first and second are correct. The third one is wrong. So correct statements are 1 and 2. Now coming to the next question. See, ARCs, it was said that the ARC, they have to submit, the asset reconstruction companies, they have to submit the data regarding the borrowers to one of the credit information companies. Now there are the rules that have been changed. It has been said that the ARCs are required to become members of all the credit information companies, and the ARCs have to share the data with all the credit information companies. ARCs must rectify any rejected data from the CIC. So if CICs have rejected the data because the format is incorrect or because of whatever reason, so ARCs have to rectify the data and re-upload it within a period of 7 days. Okay. The guidance will be applicable to ARCs from January 2025. So here the second and third are wrong and only one is correct. So D is the answer here. Okay, so D is the answer here. So it has been said, see, ARCs have to provide the information to all the credit information companies, and ARC will also be following the guidelines that were released in August. So it was said that the credit institutions, the banks, NBFCs as well as ARCs should be providing the credit information companies the data about the borrowers on the fortnightly basis, and after the finish of the fortnight there will be within the 7 calendar days the data has to be transferred from the credit institutions to the credit information companies. So the data for the 1st to 15th of the month has to be transferred within the coming 7 calendar days to the credit information companies, and the credit information companies have to digest this data, has to use this data within 5 days. Okay, so this is the idea, and these guidelines are going to come into effect from January 1, 2025. That's why ARCs also have to follow these guidelines from January 1, 2025. Okay. Now coming to the next question, I hope all of you will be able to answer this question because we have discussed this in the sessions. So the Reserve Bank of India placed on its website a research study titled Status of Digital Financial Literacy in Lakshadweep Islands, Bottlenecks and Way Forward. So this is a research study that is provided by the that is provided in the RBI website. So which of the following statement is or are correct, that you have to tell me. About 91% of the men operated their accounts by themselves. The corresponding figure among women is 71% only, that is women are operating only 71% of their accounts. Internet banking was not widely prevalent in the islands and only about 38% of the respondents used mobile banking. So this is also correct. Only about 30% of the survey respondents were familiar with the digital hygiene. They were only 30% of the survey respondents. They were the ones that were familiar with the digital hygiene. Okay. So first and second statement is correct. The third one is wrong. So here the answer is the correct statement is 1 and 2 only. Okay. Next is about the WMA. So recently it has been decided by the RBI in consultation with the Government of India that the limit for the ways and means advances for the second half of the financial year 2024-25 will be 50,000 crores. Which of the following statement is or are incorrect in this regards, that you have to tell me. That the Reserve Bank of India may trigger fresh flotation of the market loans when the Government of India utilizes 75% of the WMA limit. The interest rate on WMA will be equal to 1% above the repo rate. The interest rate on overdraft will be equal to 2% above the repo rate. The advances are typically short term with a duration of up to 180 days. So which of the following statements is or are incorrect, that you have to tell me. Read the statement carefully and try to answer. So the first statement seems correct. The third statement is also correct. The second statement is wrong, as the interest rate on WMA is the repo rate. Okay. So the repo rate is the interest rate on the ways and means advances also, and ways and means advances, it is only given for a duration of 90 days. So second and fourth are incorrect. Okay. Second and fourth are incorrect. The other statements are correct. Now coming to the next question, that is recently the forward-looking survey data has been released in October 2024 for the forward-looking surveys that were conducted in September 2024. So for the survey of professional forecasters, the survey that were conducted in September 2024, their data has been released in October 2024. So as per this survey, real GDP is expected to grow by 6.9% in 2024-25 and 6.7% in 2025-26. Real gross value added growth projection is 6.8% for 2024-25 and the 6.5% for 2025-26. So these seems correct, that the real GDP and the real GVA projections are these. Annual headline inflation based on CPI is expected at 4.5% for both the years. No, it is 4.5% for 2024-25 and 4.4% for 2025-26. Okay. So the recent forward-looking surveys have been released. The recent survey of professional forecaster has given these important data. Okay. So here the first and second statements are correct. The third one is wrong, and that's why E is the answer. Why only 2 months are covered? Not only 2 months, I'm going to cover the rest also. I am saying that I will focus on September and October. Okay. The other months are also going to be covered, and I will show you that which you have to follow also. Okay. And now this is the idea. Survey of professional forecasters on macroeconomic indicators. So this is the recent one that is released in October. So the important data, just that you have to focus on. Okay. Now the next one is, as well as the rest of the data you can read, but the important data is the exact numbers. Now the next one is that the current account, as per the survey of professional forecasters, the recent data, the current account deficit is expected at dash percentage during both 2024-25 and 25-26. So current account deficit is expected at 1% for both the years. So this is as per the survey of professional forecaster, that the expected current account deficit for 2024-25 and 25-26 is 1%. Coming to the next one, the Reserve Bank of India has also released the consumer confidence survey under the forward looking surveys. So the consumer confidence has increased. Like in the past 2 surveys, there was a dip that was coming in the consumer confidence, but now the consumer confidence has increased as per the recent survey that has happened in September 2024, whose result has been released in October 2024. So consumer confidence has increased in the current survey, and the current situation index has also improved from 93.9 to 94.7. Okay, so this is the basic idea. So there is the improvement in the current situation index from 93.9 to 94.7. So the current situation index has improved. In the last 2 surveys it was decreasing, but now it has improved slightly from 93.9 to 94.7. Now coming to the housing finance companies. So the housing finance companies, their regulation was transferred from the National Housing Bank to the Reserve Bank of India in 2019, in August 2019. Now the Reserve Bank of India is focusing on harmonizing the rules and regulations for the HFCs and the other NBFCs that RBI regulates. Okay, so the same regulations that are applicable on the other NBFCs regulated by the RBI, the same regulations are being released for the HFCs also. Now which of the following statements is or are incorrect, that you have to tell me. So now many of the things will seem understandable and you will be able to answer the questions very easily, because now we are moving forward. We have discussed the October and September of the RBI notifications and the press releases. So the difficult part is finished, because those were the recent ones, so that you must not have covered in your phase 1 preparation, because they were released in October and September. But now the notifications that we are going to discuss, they are the older ones from June, July, August. So these ones will be more easily doable for you all, that I know. Okay. So now I want fast answers from all of you. So first of all, currently the deposit taking housing finance companies are required to maintain 13% of liquid asset against. So the deposit taking housing finance companies, they have to maintain the liquid assets against the deposit that they are taking. So currently they have to maintain 13% of liquid asset against the deposits that they are taking. Okay, so it has been decided to increase this limit from 13% to 15%, and out of this 15%, only 10% should be kept as in the approved securities form. So it is not 12%, it is 10%. Okay, so it has been decided that all the deposit taking housing finance companies on an ongoing basis has to maintain 15% of liquid assets by June 2025 or from June 2025, to the extent of 15% liquid assets they have to maintain against their deposits, and with 10% in the form of approved securities. So the ceiling of quantum of public deposits held by deposit taking HFCs. So before, the HFCs were keeping the deposits of 3 times the net owned fund of the HFC, but now they are only allowed to keep 1.5 times of the net owned fund. Like the public deposits the HFCs can receive is limited up to 1.5 times of the net owned fund. So first one is correct, the second one is wrong, the third one is also correct, and that's why the incorrect statement is 2 only. So the answer is D here. Very good. So since the transfer of regulation of the HFCs has happened to RBI, the RBI is trying to harmonize the rules and regulations for other NBFCs and for the housing finance companies also. Okay. So now, maintenance of a minimum percentage of liquid asset. There is the maintenance of a minimum percentage of liquid asset. The HFCs, that is the deposit taking HFCs, have to maintain a minimum percentage of the liquid assets against their public deposits. So it was 13% and it has been said that it will be increased to 15%. It has to be increased to 15% by July 1, 2025, and out of this 15% of the liquid assets that is maintained by the housing finance companies, at least 10% should be in the form of approved securities. Now the housing finance companies, they are taking the deposit, so they can take the public deposit up to the limit of 1.5 times of the net owned fund. Before, the limit was 3 times of the net owned fund, which has been decreased. Like the public deposits that can be taken by the housing finance companies, before they can take 3 times of the net owned fund, but now they can only take the public deposits up to 1.5 times of the net owned fund. Coming to the next question, kindly try to answer this question. Try to answer this question now. So currently housing finance companies are allowed to accept or renew public deposits repayable after a period of 12 months. So housing finance companies, just like the NBFCs, they were taking the term deposits. Housing finance companies, just like the NBFCs, they take the term deposit for the minimum period of 12 months, and the housing finance companies, they were taking the term deposit for a maximum period of 120 months. But NBFCs can only take the term deposit for maximum period of 60 months. So it was said that for the HFCs also, the term deposit should be only allowed for the 60 months. Okay, so for housing finance companies, they were taking the term deposit, or they were taking the deposit for minimum 12 months and maximum 120 months. But now it has been said that the housing finance companies should be taking the deposit for minimum 12 months and maximum 60 months, so that it is like same as the other NBFCs. Okay, so before they were applicable, they were allowed to take the term deposit for or deposits for the 120 months, but now the limit is 60 months. Okay, yes, 120 and 60 is the right answer. So HFCs, they were allowed to accept the deposit for a minimum period of 12 months and maximum period of 120 months, but now the rules has been changed, and the HFCs can take the deposits for a minimum period of 12 months and maximum period of 60 months. Okay, next is housing finance companies, they can invest in currency futures or currency options as per the given rules. Next is that the let's say the the housing finance companies, they are doing the investment in their subsidiaries or companies if it is more than 10% of the investment that they are doing in the subsidiaries or companies. So more than 10%, whatever investment they are doing, so owned fund that the HFCs has minus the investment that the HFCs are doing of more than 10%, so that you have to deduct. Okay, so in terms of the housing finance companies, the investment, loans or exposure to the subsidiaries or companies in the same group, that is group entities and other HFCs, in excess of 10% of the owned fund has to be reduced from the owned fund. So owned fund is 100 crores. Now the more than 10% of the investment is happening, or the loan is being given, or the exposure is happening to the group companies or to the subsidiaries. So that much, let's say 2 crores, has to be deducted to come to the net owned fund. Okay, and even if the excess of the investment or the loans or the exposure is through the alternative investment fund, then also that amount that is in excess has to be deducted from the owned fund to get to the net owned fund. So this is the idea. Now coming to the next question, that the risk weight has been provided under the housing finance company for the commercial real estate residential building. So if there is a standard, if the commercial real estate residential building are classified as standard, how much of the risk weight has to be maintained? And if the CRE, RB, that is commercial real estate residential building, are considered as non-standard, how much of the risk weight has to be maintained, or how much of the risk weight has to be considered? So for the standard, 75% of risk weight, and for the non-standard, 100% of risk weight. Okay, So this is the idea that if we are considering the commercial real estate residential building, so 75% of risk weight has to be considered for standard and 100% of risk weight for non-standard, as well as risk weight asset for undisbursed amount. So let's say the loan has been promised but the loan has not been disbursed. Still, for the undisbursed amount also there should be some risk weight that should be attached on the basis of the notional amount, on the basis of the risk weight that is attached to the other loans. Okay, so even if it is an undisbursed amount but the amount has been promised, so risk weight has to be attached. Okay, so this is the idea. Now coming to the next notification, that is on the peer-to-peer lending platforms. So we have discussed about the new regulations on the peer-to-peer lending platforms a lot of time. So try to answer this question. Anyone who is able to answer this question? So RBI has observed that some of the P2P platforms have adopted certain practices that are not allowed. So there are the amended provisions given by the RBI. So the aggregate exposure of a lender to all the borrowers. So through the P2P platform, if a lender is having the aggregate exposure, like the maximum aggregate exposure that the lender can have through all the P2P platforms to the borrowers is capped at 50 lakh rupees. In case the amount lent by a lender is more than 10 lakh rupees across all the P2P platforms, the lender has to produce a certificate of like a certificate from the chartered accountant that his or her net worth is more than 50 lakh rupees. Okay, so if you want to lend more than 10 lakh rupees through the P2P platforms, you have to generate a certificate from the chartered accountant that your net worth is more than 50 lakh rupees. The fund transfer between the participants. So under the peer-to-peer lending platform, the fund transfer that happens should be through the escrow account that is operated by the bank promoted trustee. So first and third ones are correct, only the second one is wrong. So here the right answer is 1 and 3, that is C. C is the right answer. The third one is also correct, na? Okay, so NBFC peer-to-peer shall not provide or arrange. See, peer-to-peer lending platforms, they are providing a platform through which the lenders and the borrowers can connect and they can transact the money, right? So the platform should not be taking any credit risk, should not be assuming or should not be taking any credit risk. The NBFC P2P should also not provide any cross-selling product. If they are providing any loan-specific insurance product, that should also not be related to credit guarantee or credit enhancement. That means credit risk should not be taken by the peer-to-peer lending platform. The lender, the maximum a lender can lend through all the peer-to-peer lending platforms is 50 lakh rupees. And if the lender is lending more than 10 lakh rupees, the lender has to show that his net worth is more than 50 lakh rupees. Okay. Now, through the peer-to-peer lending platform, the lender account and the borrower's account will not be connected. The lender will be sending the money to the escrow account, to a third-party account that is managed by the bank promoted trustee, and the borrower should also be transferring the repayments to a escrow account. So this is a borrower escrow account and the lender escrow account. So from the lender escrow account, the money will be transferred from the borrower escrow account for the lending, and from the borrower escrow account the money can be transferred to the lender escrow account for the repayments. Okay, so the bank account of the borrower and the lender should not be directly connected. There should be the connection between the escrow account. So borrower shall transfer the repayments to the borrower escrow account, and through that the repayments through the borrower escrow account, the repayments will be made to the lender escrow account. From the lender account, the lending amount should be sent to the lender escrow account, and from the lender escrow account the money will be transferred to the borrower escrow account. So never the borrower account and the lender account should not be connected directly. They should be connected with the escrow account. And the escrow account, if the borrower and the lender are sending the money to the escrow account, so the escrow account should not hold the money for more than T plus 1 day. T day is on the day that the borrower or lender has sent the money to the escrow account, and plus 1, that is by the next day the transaction has to finish. Now coming to the PCA norms, try to answer this. So the net non-performing advances ratio of greater than or equal to 9% but less than 12% falls under the category of risk threshold 2. It falls under the category of risk threshold 2, not 1. The PCA framework shall be applicable to all the UCBs under tier 2, 3, 4 categories except UCBs under all-inclusive direction. Correct. Hard-coded limit of 25,000 for restrictions on capital expenditure is there under the SAF. Okay. So first one was wrong and the third one is also wrong. So the right answer is 2 only. That is E. Okay, so here the PCA framework was released for the urban cooperative banks that are in tier 2, tier 3 and tier 4 that are not under the all-inclusive directions. Okay, so for the UCBs there is the PCA framework. So prompt corrective action framework, if you are in any of the risk threshold, you will go into the if you are failing to maintain any of the indicators, you will go in the risk threshold, and if you are in the risk threshold, you will have to follow certain guidelines, the mandatory actions or the discretionary actions that the RBI imposes that the bank has to follow. So the UCBs have to maintain the minimum CRAR. They have to their net non-performing advances should be less than a certain percentage. If they are in any of the risk threshold 1, 2 or 3, the higher the risk threshold that they are in, the more the norms that they have to follow. Okay, so this is the idea. Now coming to the framework. So as you know that the framework, before, for all the UCBs there was the supervisory action framework. Now for the tier 2 to tier 4 UCBs that are out of the all-inclusive direction or that are not in the all-inclusive direction, for them there is the PCA framework. Okay, so this is the idea. Before there was the hard-coded limit of 25,000 for restrictions that were imposed on the UCBs on the capital expenditure, but now the RBI has not imposed any hard-coded limit. RBI just says that there will be restriction that will be imposed on the capital expenditure. Try to answer this question. When a UCB is placed under PCA, one or more of the corrective action must be or may be prescribed. Which of the following mandatory action has to be followed by the UCB if it is in risk threshold 1? The bank to raise capital either from existing members or by issuance of equity or other permissible capital instruments. This is correct. The declaration, payment or dividend donation will be restricted. Appropriate restriction on capital expenditure. So all of these three, 1, 3 and 4, these are the corrective actions that the banks will have to follow if they are in the risk threshold 1. Okay, so this is 1, 3 and 4 is the answer here. 1, 3 and 4. This prohibition on the expansion of total size of deposits, this is imposed on the risk threshold 3. Okay, so here you can see that risk threshold 1, they have to follow these mandatory actions. So if your urban cooperative bank is under the risk threshold 1, you will have to follow these mandatory actions. If your urban cooperative bank is under the risk threshold 2, you will have to follow the mandatory actions of risk threshold 1 as well as restriction on branch expansion. If your urban cooperative bank is in the risk threshold 3, you will have to follow all the other mandatory actions as well as restrictions or prohibition on the total size of deposits will also be imposed. Now RBI can also impose discretionary action on the urban cooperative banks on the basis that, let's say, some urban cooperative bank has governance related issues. So governance related norms will be imposed on the urban cooperative bank. So discretionary or additional actions can also be imposed by the RBI. So how you can get out of the PCA framework, how you can get out of these mandatory and discretionary actions? By not breaching the risk threshold as per the 4 continuous quarterly financial statements, out of which 1 will be audited. Based on supervisory comfort of RBI, the UCB can be taken out of the PCA. Now try to answer this question. So which of the following statements is incorrect regarding the digital payment index? So the Reserve Bank of India digital payments for March 2024 stands at 425.50 as against 418.77 for September 2023. So the Reserve Bank of India digital payment index for March 2024 stands at 445.5. Okay. The Reserve Bank of India has been publishing a composite Reserve Bank of India Digital Payment Index since January 1, 2021. RBI DPI is published on RBI's website on a semi-annual basis with a lag of 4 months. Correct. Payment performance has the highest weightage of 45%. Okay, so this is wrong. So first is wrong, fourth is wrong, and you have to tell the incorrect statement. So D is the answer here. Very good, everyone. So for 45.50, this is the recent. So Digital Payment Index, I don't think that it needs any introduction now at this phase of your examination. Digital Payment Index, it is released on the semi-annual basis, and the Digital Payment Index shows the deepening and the penetration of the digital payments in the country. The digital payments from the March 2023 to March 2024, there is the increase of digital payments by 12.6%. Okay. These are the 5 parameters of Digital Payment Index. Payment enablers that enable the payment. You need a mobile phone, you need internet, you need Aadhaar, you need bank accounts. Payment infrastructure demand side, you need cards, you need wallet or prepaid instruments and such. Payment infrastructure supplied side, you need POS machines to run that cards, right? The ATMs, QR codes are required. Payment performance, that how much increase has happened in the volume of the digital transactions, how much increase has happened in the value of the digital transactions and such. Consumer centricity, awareness and education, decreasing the downtime, decreasing the frauds. So that is consumer centricity. The highest weightage is given to the payment performance. Now coming to the financial inclusion index, read the statements very, very carefully and try to answer this question. So financial inclusion index, this is released only once in a year. It is only released once in a year. So the value of the financial inclusion index for March 2024 stands at 64.2 against 60.1 in March 2023. So financial inclusion index, it shows the financial inclusion in the country in regards to the banking segment, insurance segment, pension segment and financial market segment and such. So financial inclusion index shows that how much financial inclusion has happened in the country of the people in the financial markets, in the financial segment of the country. Okay, so how much people are financially included in the financial segments of the country. So the value of the financial inclusion index has increased from 60.1 to 64.2. The higher or the closer the index value is to 100, it shows 100 shows the full financial inclusion and 0 shows the complete financial exclusion. So the financial inclusion index has no base year. The financial inclusion index has no base year. The value of financial inclusion index lies between 0 and 100. The closer you are to 100, that means the closer you are to the full financial inclusion, as 100 shows full financial inclusion and 0 shows the full financial exclusion. So right now the value is 64.2, so that is near to 100, right? So the financial inclusion index comprises of 3 broad parameters: access of the financial services, usage, and the quality of the financial services, not quantity. So the index is responsive to the 3 broad parameters: access, usage, and quality, comprising of the 97 indicators, and the highest weightage is given to the usage parameter or the usage indicator. Okay, so this is the idea. Now coming to the next question, that the UCBs, it was said that the urban cooperative banks should be providing the small value loans, that is up to 25 lakhs or 0.2% of the tier 1 capital, whichever is higher, up to the limit of 1 crore. Okay, so UCB should be providing the more and more small value loans. Okay, now the banks have to achieve dash percentage of minimum small value loans in aggregate loans and advances by March 31st, 2025. So yes, 40%. That is, it was said that the urban cooperative banks have to achieve 50%, at least 50% of the loans that is given by the urban cooperative bank. At least 50% of the loans that is given by the urban cooperative bank should be going for the small value loans. That is the small value loans that is not more than 25 lakh or that is not more than 0.2% of the tier 1 capital, whichever is higher, subject to the maximum limit of 1 crore. Now it is said that the urban cooperative banks are not able to achieve 50% of the minimum small value loans. So it was said that by March 2025, the urban cooperative banks should achieve 40% minimum 40% of small value loans, and by 2026 the urban cooperative banks have to achieve 50% of the small value loans out of their aggregate loans. Okay. Yes. Now coming to the next question, try to answer this question. So the framework for domestic money transfer was introduced in 2011. Let's say that I have a bank account and I want to transfer the money to my mother in Uttarakhand. Now she does not have a bank account. Okay. So that means I want to transfer the money, but through the agent or through ATMs, the cash will be withdrawn. I'm not transferring the money from bank account to bank account. I'm just sending the money. So this is known as cash payout. Cash payout. Okay. I am sending the money from my bank account that will be taken out in the cash. So it is cash payout. Let's say I do not have a bank account. So I'm going to any of the bank just nearest to my house. So I'm going to the bank and I'm paying in cash. I'm giving 5,000 rupees in cash to give or to send the money to a bank account of my mother. Okay. So this is known as cash pay-in. Okay, so there is many a times when the people do not have the bank account. In this case, there is the cash payout or cash pay-in facility that is provided. So there are some rules and regulations for this. Try to answer this question then. The remitter bank shall include remitter details as part of IMPS or NEFT transaction message. So remitter bank, that is the sender bank that is sending the money, shall include. So sender bank here, the sender bank is sending the money to the bank account. So that bank has to include the IMPS, like in the IMPS or NEFT transaction, in the message, the remitter name has to be included. The guidelines on card-to-card transfer are excluded from the domestic money transfer purview. For cash payout scheme, the ceiling on the per value transaction is 10,000 and the monthly ceiling is 25,000. A walk-in customer means I'm just walking in to any bank and I'm giving the cash to transfer the money to the bank account. So the per transaction limit is 50,000 rupees if the transaction is happening through NEFT. Banks are also permitted to allow the walk-in customers to transfer fund to a bank account through the agents or through the ATMs, maximum up to rupees 5,000 per transaction, and monthly limit is 25,000. So here the E statement is wrong. Okay. So this is the basic idea that cash payout scheme is allowed or cash pay-in scheme is allowed. Cash payout, I am sending the money from my bank account and that money is going to be given to my mother in cash as she does not have a bank account, let's say. Or cash pay-in means I don't have a bank account. I am paying cash in a bank and that money is being transferred to a bank account. So there are the limits that we have discussed. Now, there are some records that have to be maintained, that in the cash payout, the remitting bank, that is the sending bank, has to obtain and keep a record of the person that the money is going to. Okay, in the cash pay-in, where I am giving the cash, in this my mobile number will be taken and the additional factor authentication will be done. OTP will be sent to my mobile and such. In the case of IMPS or NEFT transaction that is happening, so through that the remitter details will also be sent. Okay. Now coming to the bulk deposit. Try to answer this. Bulk deposit means it means single rupee term deposit, that is where the single deposit is happening of 3 crore and above in the small finance bank or in the scheduled commercial bank. So this is known as bulk deposit. Absolutely correct. Bulk deposit mean a single rupee term deposit of rupees 1 crore and above for the local area banks as well as for the regional rural banks. The term bulk deposit would now mean single rupee term deposit of rupees 15 lakh and above for all the other cooperative banks, that is other than the scheduled urban cooperative banks in tier 3 and tier 4. So for the scheduled urban cooperative banks of tier 3 to tier 4, for them, what is the bulk deposit? What is the meaning of bulk deposit? The bulk deposit would mean single rupee term deposit of rupees 1 crore and above for the scheduled urban cooperative banks that are in the tier 3 to tier 4. Got it? So here the answer is first is correct, the third is also correct, only the second one is wrong. So the right answer here is 1 and 3. Okay? Yes. So this is the limit of the bulk deposit, or this is the meaning of the bulk deposit for the scheduled commercial bank, small finance bank, 3 crore and above. single rupee term deposit. For the local area banks, regional rural banks, 1 crore and above. For the urban cooperative banks, for the tier 3 and tier 4 scheduled urban cooperative banks, 1 crore and above is the bulk deposit. And for the other cooperative banks other than the scheduled UCBs in tier 3 and tier 4, for them rupees 3 lakh and above. Now coming to the next question, Reserve Bank is organizing its third global hackathon, Harbinger 2024, Innovation for Transformation. Which of the following are the two themes of the hackathon? So there are two themes of the hackathon. That is your zero financial frauds and the being Divyang friendly. Zero financial frauds and being Divyang friendly. Can you tell me that in the zero financial frauds, what are the problem statements? How many problem statements are there? 3 problem statements are there. What are the problem statements? Ensuring transaction anonymity in case of retail CBDC. Okay, that is one. Second one is the identification, prevention of the financial frauds through the information that is available in the social media platforms or in the different platforms. The third one is the problem statement that is related to your mule accounts, identification and the blocking of the mule accounts. So there are the 3 problem statements. In the being Divyang friendly, there is only one problem statement. Okay, so here zero financial fraud and being Divyang friendly, they are your themes. In the zero financial fraud, real-time detection, prevention of frauds in financial transactions using the publicly available information, ensuring transaction anonymity in token-based or retail CBDC transactions, identifying the mule account or the accounts through which the illegal transfer of money is happening. The second theme is being Divyang friendly, accurately identifying the banknotes by visually impaired. Okay, so this is the basic idea. Now coming to the next question, try to answer this question, very easy. So here, the Reserve Bank of India announced creating a dedicated platform to address the digital payment fraud in the country. While the payment ecosystem take various measures on an ongoing basis to protect the customers, but still there is the need for the network level intelligence and real-time data sharing across the payment systems. So to take this initiative forward, there is a committee that has been constituted with Chairman Shri A.P. Hota. Shri A.P. Hota is the chairman here. Okay, so Shri A.P. Hota is the chairman for this digital payment intelligence platform. Now the next one is that there is the incentive framework that is provided under the PSL. So the districts that have less priority sector lending, in this districts, if you are doing incremental priority sector lending in such districts which have less priority sector lending. Okay, so in the districts that have less priority sector lending, that have lesser than 9,000 rupees as the priority sector lending per head. So in these districts, if you are doing the incremental priority sector lending, so that will be taken at a weight of 125%. Okay, while in a district which has very high priority sector lending of more than rupees 42,000 per head, so in this case the incremental PSL lending that you are doing, that will be considered at the weight of 90% only. Okay, the districts other than those mentioned in the first list or in the second list will continue to have the weight of 100%. So first and second one is correct, the third one is wrong, and that's why the answer is E only. You have to find the incorrect statement. Okay, so this is the idea. Now coming to the next question. On a balance of payment basis, the foreign exchange reserves have increased by US dollar dash billions during 2023-24. So during 2023-24, the balance of payment was in surplus because the capital account was in surplus and that was able to cover the current account deficit. Okay, so there was the balance of payment surplus of $63.7 billion, and that's why foreign exchange reserves increased by $63.7 billion on the basis of the balance of payment. Okay, on the basis of the balance of payment. As well as in the foreign exchange reserves, there is also the gold that is kept in the foreign exchange reserves. So the gold value also increased. So the gold value increased by $4.3 billion. So in total, the foreign exchange reserves increased by $63.7 billion and $4.3 billion. So that is $68 billion. Okay, including the valuation effect of the gold. This is the change in foreign exchange reserves, including the valuation effect of gold. So now the valuation or the foreign exchange reserves data has been released for the first quarter of 2024-25. Okay. So this is the data for 2023-24, the financial year. This is the yearly data that I have presented in front of you. Now in September 2024, there is the quarterly data. The first quarter data has also been released for the foreign exchange reserves. So in the first quarter of 2024-25, the foreign exchange reserves have increased by $5.2 billion on the basis of balance of payment. On the basis of balance of payment, the foreign exchange reserves have increased by $5.2 billion. Now coming to the current account deficit, India's current account deficit moderated to $23.2 billion, that is dash percentage of GDP during the 2023-24. So from the 2% of GDP as the current account deficit in 2022-23, we have came down to 0.7% of GDP as the current account deficit in the 2023-24. So that is the answer. Okay. Yes, very good. Now in the fourth quarter, that is Jan to March 2024, the balance of payment, the current account was in surplus of 0.6% of the GDP only in the quarter 4. If we discuss about the quarter 1, in the quarter 1 of the 2024-25, that is the April to June quarter of the 2024-25, in the first quarter, there is again we have reached to the deficit in the current account, and the deficit is higher, that is at 1.1% of the GDP. So in the first quarter of the 2024-25, the India's current account deficit has widened to 1.1% of the GDP. So this is the idea. Quarterly data, you do not have to too much focus on the quarterly data, but have the basic idea that the current account is again in deficit, and that also a little higher than before. At the end of March 2024, the India's external debt was placed at $663.8 billion, an increase of $39.7 billion. So in 2023-24, in this financial year, there is the increase in the India's external debt, but the external debt to GDP ratio has declined from 19% to 18.7%. Okay. Now if you see, so this is the data that we have discussed again and again, that the external debt was placed at $663.8 billion at the end of March 2023. The external debt to GDP ratio declined to 18.7%. Okay. The share of short-term debt also decreased. So that is a good news, because the short-term debt means the operational expenses, or this is the short-term money is not going into the infrastructure on the long-term investments. Okay, that's why short-term debt is not considered very good, but the share of short-term debt decreased to 18.5% of the total external debt. Okay, now the quarterly data has been released for external debt also. India's external debt was placed at $682.3 billion in the first quarter. From the end March, it was $663.8 billion. Now we have reached to $682.3 billion, that is in the first quarter from April to June 2024. You can understand that the external debt has increased by $13.3 billion, and the external debt to GDP ratio has also increased to 18.8%. Now try to answer this question, that is on the SRO. It is necessary that the SRO operates as a true representative of the sector, of the NBFC sector. So for the NBFC, there is a membership. So if you are a SRO NBFC, if you have got the license of the SRO NBFC, so then which of the following criteria you have to follow? Okay. So the answer here is Yes, very good. E is the answer here. So SRO for NBFC sector is primarily focused on the NBFCs in the category of investment and credit company, housing finance company and NBFC factors. So this is correct. To ensure fair representation to the smaller NBFCs, the SRO shall have at least 10% of the total number of NBFCs in the base layer, that is in the NBFC, ICC and NBFC factors. So NBFC, ICC and NBFC factors, they can also be in the base layer. So there is base layer, middle layer, upper layer and the top layer. So to have the representation of the smaller NBFCs also in the SRO, so SRO NBFC should focus on having 10% of its members from the base layer, from the NBFC, ICC or NBFC factors that are in the base layer. Failure to achieve. Now ICC and factors, they can be in the base layer, middle layer or upper layer also. So usually the HFCs, they are usually in the middle layer or upper layer. Failure to achieve the membership within 2 years can revoke the grant of recognition. So the recognition can be revoked if within 2 years the membership has not been achieved. The applicant of SRO for NBFC should achieve a minimum net worth of rupees 2 crore within a period of 1 year, and there are maximum 2 SROs that will be recognized for the NBFC sector. So that is 2 NBFCs. 2 SROs will be recognized for the NBFC sector. So that's why E was wrong. Now the applicant of SRO for FinTech should achieve. Now there is a SRO FinTech. So SRO FinTech should achieve a minimum net worth of rupees dash crore within a period of dash year after the recognition of an SRO. So the minimum net worth that the SRO FinTech has to achieve is 2 crores within a period of 1 year. Okay. So the answer here is C. As well as, can you tell me that which the RBI has approved the application of dash to become the SRO FinTech? To become the SRO FinTech. So it is the FinTech Association for Consumer Empowerment, that is FACE. Its application has been recognized and it has become the SRO FinTech. Okay, and there can be, it has been written in the category of SRO FinTechs, there can be multiple SROs that can be recognized. So applicants should have a minimum net worth of 2 crores within a period of 1 year. So number of SRO FinTech to be recognized would be considered on the basis of the number and nature of applications. So there can be multiple SRO FinTech that can be recognized. Currently there is the SRO FinTech that is recognized. So FinTech Association for Consumer Empowerment, this entity has been recognized as the SRO FinTech. Okay. So now there is also the framework. Do you know that for the SRO financial markets, so there is the guidelines, there is the framework that has been released for the recognition of SRO in the financial market. So RBI also handles the government securities market, the interest rate market, the derivatives on interest rate or the foreign exchange market. So for the financial markets that is under the Reserve Bank of India, there is the SRO financial market that for that the RBI has released the guidelines. For the SRO financial market, what is the minimum net worth that is stated by the RBI? 10 crore. Very good. So for the SRO FinTech, the minimum net worth that is required is rupees 2 crore. For the SRO NBFC also, the minimum net worth that is required is 2 crores. Okay, so for minimum net worth of SRO NBFC and minimum net worth of SRO FinTech is 2 crores. But in the case of SRO for financial markets, the minimum net worth is said to be 10 crores. So SRO financial markets, if you want to become a SRO in the financial market, the minimum net worth that is required is 10 crores. Now, SROs should be a profit making company or should be not for profit company. So SROs in any of the category should be not for profit company under the section 8 of Companies Act. Okay, so this is the basic idea. Now coming to the next question, that there is a committee, expert committee that has been constituted under the chairmanship of Dash for the benchmarking of the statistics at the global standard. So the statistics, the data collection, the information generation of our country should be at the global standard. So who is the chairman of this committee? It is Dr. Michael Debatra Patra. Okay. So he is the chairman of this committee that is constituted for benchmarking the statistics for like at the global level the data that we are collecting, the data that we are disseminating, the data that we are sharing should be as per the global standards or best practices. Okay. Now, see, there is a previous session, like before the phase 1, I have taken a marathon. I will suggest you that at least download the PDF of this marathon and attempt the questions, because in this marathon we focused on June, July and August, and in the today's session I have taken these months also, because of course I cannot discuss each and everything in depth. So kindly like go through the marathon. If you do not want to go through the whole marathon, at least download the PDF and do the questions. Do the questions of this session also. Okay, it will also boost your understanding as well as it will pump up your preparation. Okay, so that is also what I will suggest, that if you do not have the time to see the session, at least download the PDF of this session and attempt the questions. Okay, now we are going to the finance section, finance current affairs. So try to answer this question, that IEPFA under the aegis of the Ministry of Corporate Affairs, Government of India, celebrated its foundation day recently. Which of the following statement is or are incorrect in this regards? So IEPFA was formed on September 7, 2016 under the provisions of subsection 5 of section 125 of the Companies Act of 2013. The foundation day conference that was conducted by the IEPFA was on the theme of empowering investors, financial literacy as the key to combat fraud and digital scams. So this is correct. IEPFA in collaboration with the NCAER and Pardada Pardadi Educational Society organized the annual half marathon Niveshak Mashal. Okay, so first is wrong, second is correct, third is wrong. So here the incorrect statement is 1 and 3. Okay, so C is the answer here. So this is the basic idea, that the IEPFA has organized the conference on the theme empowering investors, and IEPFA also organized a annual Niveshak Mashal half marathon. Now this was in collaboration with the NCAER and PPES. Okay, so this is the basic idea. Now IEPFA has also undertaken many of the different events. Like IEPFA is quite in news and a descriptive question can come on this. So just have the brief idea about the background of the IEPFA and the steps that has been taken by IEPFA. So as you can understand that the IEPFA has taken the steps of organizing Niveshak with the India Post Payments Bank, Niveshak SAARC with Common Services Center, as well as IEPFA also conducted the second Niveshak Sunwai meet in Ahmedabad for informing the people about the Investor Education and Protection Fund. Okay, that how you can claim the money from the Investor Education and Protection Fund. So if your shares, if your dividends, if your debentures are unclaimed for 7 years, they are sent by the companies to the Investor Education and Protection Fund. And if after 7 years you got to know that okay, your shares are there, so you can claim it from IEPF. So Niveshak Sunwai is a meet, or the it was conducted by the IEPFA to make the people more aware about the IEPF process. Okay, now Department of Financial Services, Ministry of Finance has highlighted significant growth in the digital payment in India. Which of the following statement is or are incorrect in regards to the data provided? So as per the data provided, the volume of digital payment transaction in the financial year 2023-24 has increased by 44%. So the compounded annual growth rate was 44% in the volume. So volume of digital payments have increased by 44% in financial year 2023-24. The value of digital payments has increased by 11%. Okay, the UPI is now operational in how many countries? In 7 countries, not 10. Okay, so first and second statement is correct. The third one is wrong, and that's why the E is the answer here. Okay, the volume of digital payment transactions in financial year 2023-24, the growth is, the compounded annual growth rate is of 44%. The values of the digital payment transaction, its growth rate is 11%. Okay, so this is the idea. UPI is now operational in 7 countries. The next one is that RBI, that is the regulator of the Insolvency and Bankruptcy Code. So the IBBI is the regulator of the insolvency and bankruptcy process. It has recently celebrated its 8th annual day on 1st October 2024. Okay, so recently the IBBI has celebrated its 8th annual day on 1st October 2024. So the IBBI, that is the Insolvency and Bankruptcy Board of India, it is the regulator. It is the regulator of the insolvency and bankruptcy process. It is the regulator of the entities that are involved in the insolvency and bankruptcy process. It regulates the insolvency professionals, insolvency professional agencies, and such and such. Insolvency and Bankruptcy Board of India celebrated its 8th annual day on 1st October 2024, and it was established on 1st October 2016. Okay. So this is the idea. Now, which of the following statement is or are correct in regards to the data released under the MSCI? So MSCI is the Morgan Stanley Capital International. Okay, so Morgan Stanley Capital International, it releases the benchmark, or it releases the data for the global equity capital. Okay, so in the global equity markets, the Morgan Stanley Capital International, so Morgan Stanley Capital International, it is the benchmark for the global equity markets, global share markets. Okay, so India has surpassed China to become the top weighted nation in the MSCI Emerging Market Investable Market Index. So basically, the Morgan Stanley Capital International data has been released. This is the data for the global equity market, and in this MSCI there is the emerging market category. That is, emerging markets are India, Brazil, China, and such countries are the emerging markets. So MSCI, in the MSCI emerging market category, the investable market index, that which country is more investable and which country is more more foreign investors want to invest in a country. So India has surpassed China in this index, means India is more investable country. Okay, for the first time this has happened, that India has surpassed the China, and now India has become the top country in this index in the emerging market category. But if we see for the all world, or for all the countries, that is even including the developed countries like US and UK, so India has become the 6th largest market in the MSCI All Country World Investable Market Index, and major Indian companies are your Reliance Industries, Infosys, and ICICI Bank. So second and third statements are wrong, only the first one is correct, and so your answer is D. Correct statement is only D, first one. Okay, so India has surpassed China. Here you can see India has surpassed China, and India has become the largest emerging market in GOG, that tracks the performance of global capital market. So this MSCI, that is Morgan Stanley Capital International Index, it is a widely recognized benchmark for global equity market. Okay, and in this index India has surpassed China, and India has become the top emerging market country. Okay, now if we compare with the all world countries, that is including the developed countries, India is at the 6th position. Okay, just below some of the developed countries. Coming to the next question, Securities and Exchange Board of India introduced new guidelines for the application process of public issues of debt securities, which will be effective from November. Which of the following statement is or are correct? So retail investors that are applying for public issues of debt securities through intermediaries like stock brokers for amounts up to 5 lakh. Like if you want to invest in the public issues of debt securities for amount up to 5 lakh, you have to use the UPI to block the fund. This is must for the retail investors. SEBI has reduced the period for seeking comment from 7 working days to 1 working day for the companies that have already released their debt securities in the previous time, and for the public comments on draft offer document, the timeline has been reduced from 7 working days to 5 days for the companies that are releasing the debt security for the first time. Okay, the minimum subscription period has been shortened. So the subscription period is your 2 working days now. Before it was open for 3 working days. So first is wrong, third one is, second and third are correct. Okay, so here the right answer is B. Okay, so simply retail investors, if they are applying for the public issues, they have to block their amount up to 5 lakh through the UPI if they are investing up to 5 lakh. Okay, review and subscription period has been changed. So the SEBI has reduced the period of seeking public comments from 7 days to 1 day in case of the company has already issued such kind of securities before also, and the the review has been decreased from 7 days to 5 days. Public comments before they were demanded for 7 days. Now the timeline is 5 days for a company that is issuing the debt securities for the first time, or these kind of securities are released for the first time. Minimum subscription period has shortened from 3 days to 2 days. Now SEBI new asset class. There is a new asset class that has been developed by SEBI. This will enable asset management companies to offer strategies like long short equity to high risk investors. So before, you can understand that there were mutual funds for the retail investors or for the other kind of investors, but the mutual funds have to follow a lot of regulations because the retail investors are also investing in the mutual fund now. So mutual fund had to follow a lot of regulations. There is the portfolio management service that you can take, but here the minimum investment is 50 lakh rupees, or there is a huge investment that is required in the portfolio management service. So there were some investors that want to invest more and that want to take more risk. The mutual funds are not allowed to take very high risk. So if you want to take more risk but you do not have 50 lakh rupees, what should you do? So there is a new asset class that has been developed. The minimum asset investment for this new asset class is 10 lakh rupees. Okay, catering to investors with higher risk appetite. These will have adequate safeguards such as there will be no leverage, no investment in unlisted or unrated instruments beyond what is permissible. So this is wrong. There should be no leverage, no investment beyond a limit. Exposure to derivatives should be limited to 25% of the asset under management. So second and third are wrong. Only the first one is correct. Okay. So this is the SEBI's new asset class that whose limit is 10 lakh, like whose minimum investment limit is 10 lakh rupees and this. Okay. So SEBI had proposed the new asset class in August, and in October there is the final guidelines that have been released. Okay. Now recently DICGC has launched an online tool for depositors to track their claim. It is a user-friendly online tool to improve the services provided for the depositors. Which of the following statement is or are correct that you have to tell me? So try to answer. Let's see how many of you are able to correctly answer this. Very important. The ICGC has launched an online tool with the name Dawa Sugam. Depositors can view the status of their claims for banks placed under all-inclusive directions after April 1, 2024. To provide insurance coverage for bank deposit up to 5 lakh per depositor per account. This is the task of the DICGC. So the first statement is wrong because it is Dawa Suchak, not Dawa Sugam. Okay. The second and third statements are correct. First one is wrong, and so the answer is B here. Okay. The answer is B here. So this is your Dawa Suchak that you can see. It is the claim settlement status window, and the DICGC has launched the Dawa Suchak so that you can like feed in, like you can select the bank, put in the mobile number, and you can know about your claim settlement, that how much time the claim settlement is going to take. Okay. So this is the basic idea. Any confusion anyone has till now? So the corporation, so the DICGC ensures that all the category of deposits with banks except institution deposits, they are insured, and till 5 lakh limit it is insured. And this is additional information about the DICGC. DICGC ensures 97.8% of the total deposit accounts are fully protected by the DICGC. Of the remaining 2.2% of the accounts, deposits are insured up to the limit of 5 lakh. Okay. In the case of liquidated banks and banks under Reserve Bank all-inclusive direction, the DICGC has settled the claim amounting to 1,432 crores, out of which it has received back 900 crores from the banks under the liquidation or from the banks under the all-inclusive direction. Now coming to the next question, try to answer this question. Dash has partnered with NPCI Bharat Bill Payment Limited to launch the BBPS business-to-business platform. So till now, the customers, they can pay the bill for the electricity bill, the water bill, and the different kind of card payment bills and different kind of bills you can pay through the Bharat Bill Payment System. So customers were allowed to pay the bill through the Bharat Bill Payment System. Now it has been said that the businesses can also pay the bill for the other businesses through the Bharat Bill Payment System, and this will be called Bharat Bill Payment System business to business platform. Okay, so now the businesses, for the businesses to pay the bills to other businesses. Let's say there is a MSME that is selling the tables to some government entity or to some private entity. Like EduTap, we are a business, right? We are a company. So we are buying some tables from a MSME or from another company. So we can pay the bills through the Bharat bill payment system. So this is the idea. So the Paymate has partnered with NPCI Bharat Bill Payment Limited to launch the Bharat Bill Payment System for business to business platform aimed at transforming the business payments and streamlining the business payments. Okay, so it is Paymate. So Paymate has partnered with NPCI Bharat Bill Pay Limited to launch the Bharat Bill Payment System business to business platform for collections for invoicing, payments and such. It seeks to enable the large scale standardization and digitization of commercial processes related to invoicing, payments, collection across the nation while fostering an interoperable ecosystem between buyers and suppliers and such. Now coming to the next question. See, Department of Economic Affairs, Ministry of Finance has notified that there are the new proceedings for the compounding. So has notified the foreign exchange compounding proceeding rules 2024 superseding the previous 2000 rules as part of the Union Budget 2024-25 announcements. So as per the new rules, the Reserve Bank can compound various violations. Okay, so which of the following statement is incorrect, that you have to tell me. Okay, so the Reserve Bank can compound various violation where the sum involved in such contravention does not exceed 60 lakh rupees. An officer from RBI will be chosen that is not below the rank of Assistant General Management of the Reserve Bank. Where the sum involved in such contravention does not exceed 2 crore rupees, an officer not below the rank of Deputy General Manager will be chosen from the Reserve Bank. So basically this is wrong. It is 2 crores, not 3. So try to understand that these regulations. So Department of Economic Affairs, Ministry of Finance has notified the foreign exchange compounding proceeding rules 2024 that has superseded the previous 2000 rules. Okay. So RBI has also released the guidelines in regards that RBI will, like the Reserve Bank also has to undertake the compounding. So how RBI is going to take compounding, for that RBI has also released the guidelines that we have understood in the starting only. Okay. Now in terms of the foreign exchange compounding proceeding rules, it has been said that the compounding authority can be Director of Enforcement or an officer of the Directorate of Enforcement not below the rank of Deputy Director or Deputy Legal Advisor. An officer of the Reserve Bank can also be the compounding authority not below the rank of Assistant General Manager. Okay, so you know what is compounding. Contravention is the violation and compounding is pleading guilty in a way. Compounding authorities of RBI for violation involving sum up to 60 lakh, officer not below the rank of Assistant General Manager if the violation is of the 2.5 crore, not 2 crore, it is 2.5 crore. If the violation is up to the limit of up to 2.5 crore, officer not below the rank of Deputy General Manager. So if like the Deputy General Manager will be the compounding authority, will be compounding this whole violation. Okay, if the violation is of the amount up to 5 crores, officer not below the rank of General Manager, so General Manager will be chosen that will be compounding this particular violation. If the violation is above the 5 crore rupees, the officer will be chosen not below the rank of Chief General Manager who will be doing the compounding of this violation. Okay, in case of Directorate of Enforcement, there are the limits and different, like you can understand that if the limit is smaller, so the Deputy Director of the Directorate of Enforcement, if the limit is higher, then the Additional Director, if the limit is still higher, Special Director, if the limit is still higher, Special Director, as well as with the Legal Advisor and such. Okay, so this is the idea. Now coming to the next question. In line with its mandate of investor protection, SEBI has an artificial intelligence based conversation platform for investors. Which of the following statement is or are correct, that you have to tell me. So read the statements very carefully and try to answer. We have only a few questions left, so try to answer this. 6-7 questions are left. So let's see how many of you are able to answer this question. SEBI has an artificial intelligence based conversation platform for investors. So which of the following statement is or are correct, that you have to tell me. So the name of the conversation platform is SEBI's virtual assistant, that is SEVA, that is correct. The chatbot is presently enabled to answer questions relating to general information, correct. Chatbot is available on SEBI's investor website as well as SAARC mobile app. It is not available in stockbrokers website. Okay, so the first and second are correct, third one is wrong. So the answer here is A, that is 1 and 2 are correct. Next is your SEBI proposed significant amendments to the derivatives trading framework. In the FNO segment, in the future and option segment, there is the changes that has been made, or the changes have been proposed by SEBI. So SEBI plans to reduce the number of weekly option contract from 18 to 6, correct. Minimum contract size will be increased from 15 lakh to 20 lakh and 20 lakh to 30 lakhs, so this is wrong. Extreme loss margin, that is the additional loss margin, will increase by 3% and 5%, so this is also correct. So first and third one are correct, the second is wrong. Okay, so you have to tell the incorrect, so only second one is incorrect, so that is the answer. Next one is that there was a MS Sahu expert panel that recommended the new arbitration and mediation law for the IFSC. So in the IFSC, in case of companies getting into some problem or getting into some disputes, so in case of the disputes arising from the companies, there is arbitration and mediation law, that in which there is the new recommendations that has been given by MS Sahu panel, or MS Sahu committee has given the recommendation. MS Sahu panel proposed a 21-day time limit for filing an appeal against an arbitral award. So if the adjudicating authority has given a award, let's say the stockbroker has to give the award, or has to give the repayment, or has to give some penalty to the customer. Okay, now this is the arbitral award. If there is the appeal that has to be made against the arbitral award, so before there was a timeline of 90 days, that within 90 days you can make the appeal for against the arbitral award. Now the timeline is suggested to be reduced to 21 days. The special high court has to be created, shall be named as IFSC International Court for handling the disputes between the companies, or for handling the disputes in the IFSC, and shall have all the powers of the High Court excluding the criminal jurisdiction and writ. The committee recommended establishing, the MS Sahu committee has recommended establishing the Alternative Dispute Resolution Center at the GIFT City as a not-for-profit entity under the Companies Act, correct. So 1 and 3 are correct, second one was wrong. Okay, so here the answer is E only, that second one was incorrect. So here you can see that IFSCA formed the committee led by MS Sahu for the drafting of the rules and guidelines to set up the Alternative Dispute Resolution Center in GIFT City. Okay, so the ARDC will be set up, and it has been suggested by the MS Sahu committee that there should be a creation of a separate bench in the Gujarat High Court to deal with matters that are arising from the Alternative Dispute Resolution Center, and in phase 2 there should be a separate high court that should be created for the things related to the IFSC, or for the things related to the Alternative Dispute Resolution Center. So right now in the phase 1 there should be a separate panel, or there should be a separate bench in the Gujarat High Court for handling the disputes arising from the ADRC. And later on in the phase 2 there should be a separate high court, that should be made for the handling of the disputes arising from the ADRC. Okay, and this is the idea. Now coming to the next question. So the Banking Law Amendment Bill 2024 was introduced in Lok Sabha. Which of the following statement are correct regarding the proposed changes in the bill? So that you have to tell me. So the bill proposes increasing the nominee option per bank account from 1 to how many? From 1 to 4. The bill defines substantial interest for directorship by raising the threshold from 5 lakh to 3 crore to 2 crore. So substantial, the directorship will have the substantial interest in the bank when the directorship has the 2 crore worth of the paid up capital. Before the limit was 5 lakh. So the amendment or the proposal is to increase the limit from 5 lakh to 2 crore. Okay. The bill proposes that the maximum consecutive tenure of directors of cooperative bank be increased from 8 years to 10 years. So only the third one is correct. So which of the following statements is or are correct? So only the third statement is correct. So answer is E. Okay, so first one is wrong, second one is also wrong. So the currently under the Banking Regulation Act, substantial interest in a company refers to holding shares worth of 5 lakh rupees or 10% of the paid up capital. Now the limit from 5 lakh is proposed to be increased to 2 crore. As well as it has been said that there should be the tenure of directors of the cooperative bank should be increased from 8 years to 10 years. As well as there are some other changes that have been proposed, that the nominee options to increase from 1 to 4, as well as fortnight when we are considering the fortnight. So the fortnightly on the fortnightly basis the data has to be submitted. So fortnight should be from 1st to 15th and from the 15th to the last day of the month. Okay, so that should be the meaning of the fortnight. Now recently the RBI formed a committee to review the fee structure for the white label ATMs, that is the ATMs opened by the non-banks. Okay, now for the fee structure there is a committee that has been constituted to review the fee structure of the white label ATMs. Now who is the chairman of this committee? Very good, Sunil Mehta is the chairman of this committee. Correct. Now next is Dash accounted for the highest share of foreign portfolio investors investing in India during the fiscal year 2023-24 as highlighted in the annual report of SEBI. So which country accounted for the highest share of FPIs investing in India during the last financial year? It was USA. So US accounted for the highest share of FPIs investing in India during the last financial year. Now, recently in August 2024, NPCI has hived off the UPI based payment application BHIM, that is Bharat Interface for Money, into a separate subsidiary. So NPCI has different subsidiaries: NPCI Bharat Bill Payment subsidiary, or NPCI Bharat Bill Payment, so that is NPBS. There is NIPL, that is NPCI International Payment Limited, as well as now there is a third major entity, that is NPCI BHIM Services Limited, NBSL. So the BHIM, that is the Bharat Interface for Money, so that has become a separate subsidiary of NPCI, that is NPCI BHIM Services Limited. So it has become the third major entity under the NPCI, following the NIPL and NBPL, National Bharat Bill Pay Limited, and the National NPCI International Payment Limited. Okay, Rahul Handa is not. It is the Lalita Natraj, a former senior executive at IDFC First Bank, has been appointed as the CEO of NBSL. BHIM stands for Bharat Interface for Money. So first one is correct, third one is correct, second is wrong. Yes, so the right answer is, incorrect statement is 2 only. So B is the answer here. Okay, Lalita Natraj has become the CEO. Next one is that, okay, there is UPI circle that has been launched by the NPCI. So which of the following statement is correct in regards to the UPI circle? Okay, and we are just at the end of the session. So this is your second last question. Then we have one last question, and this is the end of the session. So try to answer this question. I will wait for your answers because this is an important topic. So NPCI introduced a new feature called UPI circle, that is for the delegated payments. If I want to, like, my UPI ID is there and I want my brother, who is just a student right now, so I want my brother to use my UPI ID. Okay, so my brother can use my UPI ID and can transfer or can do the transaction using my UPI ID. So I am delegating the payments to my brother. Through my UPI ID he can make the payment. So I am the primary user of this UPI ID and my brother can become the secondary user of the ID. Okay, or my mother can become the secondary user of the UPI ID. So UPI circle is for the delegated payments. For full delegation, secondary users can complete the transaction within predefined limits without further approval from the primary user. Monthly limit for this is 15,000 and per transaction limit is 5,000. Okay, so this is correct. A primary user can delegate up to 5 secondary users, and a secondary user can only delegate up to, like, can only have the delegation from one primary user. So secondary user can only have one primary user, but primary user can have 5 secondary users. Members shall ensure that during the cooling period, that is first 24 hours, a daily transaction limit is imposed of 5,000. Okay, so this is also correct. Only the second one is wrong, and that's why 1 and 3 is the answer here. So this is the UPI circle, that is for the delegation of the payments. So full delegation means that no further approval is required from the primary user. So in the full delegation, the limit is 5,000 per transaction limit and for 15,000 monthly limit. Okay, 5 secondary users can be chosen by the primary user, but the one secondary user can only have one primary user. Okay, so secondary user can only choose one primary user, but the primary user can have 5 secondary users. Now coming to the last question. So the Global FinTech Fest has happened recently. Which of the following statement is or are correct? That you have to tell me. So the Global FinTech Fest is an annual FinTech conference organized by the Payment Council of India, the NPCI, that is National Payment Corporation of India, not RBI, it is NPCI, and the FinTech Convergent Council. Okay, so first one is wrong. It was started in 2020. So Global FinTech Fest, it was started in 2020 and has emerged as the world's largest FinTech conference and the largest thought leadership platform in the FinTech landscape. So it was started in 2020, not 2021. Under Global FinTech Awards, Banking Tech Award for Best Cross-Border Solution has been given to TerraPay. So this is correct. So only the third one is correct. So C is the answer. Oh, sorry. You have to tell the incorrect. So 1 and 3 are in 1 and 2 are incorrect. So that's why answer is C. Okay. So first one is incorrect because it should not be RBI. It should be NPCI. And here it should not be 2021. It should be 2020. So first and second are incorrect. And that's why E is the answer. Okay. Yes. So about Global FinTech Fest, it was Global FinTech Fest is an annual FinTech conference organized by Payment Council of India, National Payment Corporation of India, and FinTech Convergence Council. Started in 2020. The GFF is its 5th edition in 2024, and it was started from 2020. Okay, so these are the Banking Tech Award. Best Cross-Border Solution is TerraPay. Green Banking Initiative, Punjab National Bank. So you do not have to remember all of this. That will be very difficult, but at least have the basic idea. Just read the name of the important, like Protean eGov Government Technologies has earned the title of Best Digital Public Infrastructure. So just read it once so that you have the overall idea. Okay. So this is it for today. Any confusion anyone has? Any question anyone has? Any question? Any confusion anyone? No questions? Okay, so thank you very much everyone. I hope you enjoyed the session and you were able to give the right answer of the most of the questions. The October notifications that we did in the starting, I know that they are new for you, so just reread it, just go through the PDF and just see the part again so that you have the idea that what the October notifications are all about, what they are stating. Okay, so this is it for today. I hope you understood the things. If there is any confusion you have, you can also comment down below, as well as I will suggest you to do read the PDF again, because the new notifications are quite overwhelming. The October notifications can be very overwhelming, but there are only 2-3 difficult notifications. That is your form of business for the banks and the compounding notification. That is also a little overwhelming. So just read through the statements. It is like very easy to understand once you get the gist of the idea. Okay, so this is it. Thank you very much for joining the session. So this is it for today, and you are most welcome Ashish, you are most welcome Saurish. All the very, very best for the examination. It is just around the corner. Just focus on revising right now. That's it. Okay, thank you everyone. Thank you for joining. I hope you enjoyed the session, and all the very, very best for the examination.